Yeah, I have respect for Robert Kiyosaki, for Harry Dent. I've known him many, many years. Great guys, great for the industry. What they've done. I just don't agree with them. And a lot of the bears, such as the two of them, they've been kind of screaming from the hilltops the same thing for a decade now. Plus, Harry Dent's been talking about this for literally 20 years, and it just doesn't happen. And again, not to put them down at all. I just view it a little bit differently. Where if you look at the history of the stock market, the history of the economy here in this country, the odds are market's going to be up. The odds are the economy is going to grow. Sure, there's going to be recessions, there'll be bear markets, but I try to play the odds. And the odds are that things will continue to move higher from lower left to upper right. Looking at 2022, we kind of know that there's going to be at least 2 or 3 rate hikes, and that's been a bit of a concern. But that should really tamper down inflation, which has been a concern as well. So both of those things are really priced into the market and the economy, in my opinion. I think the one thing that a lot of the bears are overlooking is the fact that profits are at an all-time high for corporations, and that will continue next year. Net margins are at an all-time high, meaning companies are making even more off every dollar. So we're at a really good time right now. And at the end of the day, stock prices are based off how much money they're making. So if we're at an all-time high with corporations making money, it should have the stock market at all-time high as well, which we're not far from that. So I don't think that trend ends, Danny, anytime soon. I think that will continue. And even though interest rates will go up, they're still historically low. Inflation will come back in check, in my opinion. We're basically fully employed. People who want jobs have jobs. So we're sitting in a really good situation. It's strange. Like I just came back home to Pennsylvania, a small town I'm from, and it's kind of that small town mentality, and everybody's really negative here. And I throw out all these good things, and it's just they don't want to hear it. So I understand where the negativity comes from, but I guess logically it doesn't make sense to me.
So have we reached peak inflation for you then? Is the worst behind us?
I think so, because a large portion of that is going to be energy prices, and I think obviously we've seen energy prices come down. The one thing that could throw a wrench in that is, at some point in 2022, I think that we finally realized that COVID's not going anywhere. If you look back in 1918 Spanish flu, I've done a lot of research on it. By 1920, Spanish flu was a seasonal flu, and still here. I think we're going to see the same thing happen, where it's just going to be the seasonal flu. That's going to get people back to work. It's going to get corporations back moving, more people traveling, which could create a big demand for oil and gas. And right now, producers their CapEx spending is at the lowest level since 2005. So that could see a big spike as we get back to normal. Yeah, you kind of become numb to the news. I remember I was living in New York City at the time, and every time you get another news story, people would freak out. And then at some point, 2 years later, if there is a bombing somewhere, something happening, even if it's something horrific, the markets didn't react the way they did 2 years prior. So I think you'll see the same thing if another variant comes out a year from now, because you're seeing, obviously, it's not nearly as deadly or as severe as others, as more people get vaccines. So I think that it does happen, but I also think it does get better. And that leads to the market reopening. We all know we want to get back to travel. We want to get back to work. We want to get back to normal life. And, that's going to create more demand for goods, which, keeps inflation, higher because you have this demand. But the thing is, the supply chain, to me, eventually will be fixed. And once that gets fixed, we will see kind of inflation get in check. And I think we did peak out, to answer your original question.
Winning sectors then for you. Who comes out on top if you are playing the stock market?
Two areas. One asset class. One asset class is going to be small cap stocks. They have lagged the large guys for several years now. The Russell 2000, which is 2,000 small mid cap stocks, actually broke out about 6 weeks ago. It failed, but a lot of things going on in the market. I think that breakout happens once again in the first quarter of next year. And I think you're going to see small caps outperform for the next couple of years. Another sector is biotech. If you go back about 15 years, biotech has bad years every once in a while. The last 3 times we've had double-digit down years, which we're going to have this year for biotech stocks, the average gain in next year is about 35%. And I think we're going to see that next year. Some of these biotech stocks have gotten absolutely crushed. And for me, one of my greatest themes for the Roaring 2020s is healthcare and innovation that we're seeing in healthcare, and biotech is leading that. We have just such amazing things on the horizon when it comes to healthcare, and these biotech stocks are the ones coming up with the innovation. So I see some really good opportunity in biotechs going forward. And then, of course, I'll throw in a bonus one here is cryptos. I think Bitcoin hits triple digits, hits 100 grand at some point in 2022. So I think buying down here around 48,000 is a great bargain. Again, I always say it could fall to 35 before it goes to 100. I don't know. But for me, I always keep buying on the dips, and I think that's pretty much a given at some point this year. I had a money management firm for almost 20 years, so I always get those questions from people saying, well, I read this article, Matt, what do we do? And, it's the world of the internet, so anybody can share their thoughts. And the thing is, there's going to be as many people on one side as the other. And I like that because that's what makes a market. If it's a crowded trade, let's say everybody's bullish, it's probably near the top and vice versa. So I'm okay with views. And again, I'm entitled to my view and they're entitled to theirs. But when I hear that, I simply look at economics 101, and it's supply and demand. There's more people that are buying Bitcoin like myself and holding it. There's more institutions buying and holding it. There's more institutions and corporations opening up to the idea of buying Bitcoin for the first time. There's more retail investors opening up. We've already mined 90% of all Bitcoin. The next 10% will take 100 years. So you have your supply is stagnant, let's call it, while demand will increase over time. It's going to have ups and downs, but it will increase over time, which leads to higher prices. So for me, I could it have a crash at 20 grand because of something? Sure. It wouldn't surprise me, but I'd be a heck of a buyer down there. But again, I think over time, there's nothing that can stop this train right now because of simple supply and demand. We don't know how it's going to react. I mean, my inclination is you will see people go into Bitcoin. As they start tapering and as interest rates go up, obviously, investments that pay dividends and interest become more attractive. So that could take away from something like Bitcoin because that safety has a higher interest rate that it's paying. To me, though, interest rates are still so darn low that even if they go up 75 basis points next year, it's still historically low that it really shouldn't affect Bitcoin much. I want to see Bitcoin start to really differentiate itself from other asset classes. I like to see it trade on its own. Right now, I see it trading as a risk-on trade. So when the tech stocks do well, it does well, and then we have that risk-off trade and people sell stocks, it tends to come down with it. I would like to see it differentiate itself, and I think over time it will. And, the big picture, again, on top of supply and demand, is the fact that I don't care if you're a gold bug, a Bitcoin person, whoever you are, you hate stocks, you love stocks. Most of us are pretty infuriated with our governments and with what they're doing in the central banks. So this is just one option to kind of stick it to the man and get away from the governments, something that cannot be really manipulated. And again, that's just another bonus for it, where, tapering interest rates, they can do all kinds of stuff. We don't know what they're doing. Yeah, and for I know a lot of your viewers, Danny, are in gold. To me, it's similar to a gold miner. They're going to be a little more leveraged, but if I'm right and Bitcoin goes to 100 grand, the Bitcoin miners, that's a double, let's say, in Bitcoin. And Bitcoin miners should be 4 to 5x, if not more. Same thing, you'll see, it's more leveraged. So they're making money. They have great fundamentals right now. As long as the price of Bitcoin stays up. If the price of Bitcoin goes down, they get crushed. So you have to agree with me with the price of Bitcoin. But everything from Riot to Marathon, there's a couple that we have in our portfolio that are exchanges as well. They'll do well. Look at Coinbase. I don't have exposure to any of these stocks I just mentioned, but they're all ways to play Bitcoin without actually owning Bitcoin or crypto.